Okay, we're here on the euro dollar and we have a form of flag pattern. This is that flag pattern where we have a very directional pole. All the candles are the same color, can be all the way up to the top. Looking like we may get an entry here in 2 minutes. Or not. Now, what I want to do is I may end up getting an entry not on this 15-minute candle, but maybe on the next one. So I am just going to talk through the higher time frame analysis. I'm going to put a structure level on just here. You can clearly see that we have had a break below, close below. The problem is the next structure level is right here and here, which have not been violated. Let's go down to the 240. Here on the 240 we have also held those structure levels, and if we just go down to the 60 we do have a break below, close below. So I am going to move that structure level down to there, and if we look now, we have clearly now violated this level and this level, so I'm expecting price to come to this level. So we don't have the higher time frame confirmation, but what we do have is, look at the direction of this. We are clearly bearish. Yeah, clearly bearish here. And if we just look at the trend, I'm not going to draw it all out, but we had a new low, outside return, new low, outside return, new low, outside return, expecting a new low. But I do need more of a conservative entry because we do not have the 240 or daily confirmation. Now these patterns here, and again guys, look, we are in trend, outside return, new low, outside return, new low, outside return, new low, outside return, new low. Coming into this outside return, look at the structure level we have got just here. So we have got test, sugar, let me get rid of that. Just 1 second, was that a lower low, lower close? No, it wasn't. Okay, no entry on this 15-minute candle. So we've got a test, and a test. And we've got that lovely bearish run, and all the candles the same color. This is a very high probability trade. Now I can take a double top on the 5 minute as long as it's within the wicks, and typically what we tend to see with this type of move is we get the breakout, we come back up for the retest, and then we get the move lower. Very high probability trade. If we get that, around an 80% chance. Again, depends on the time frame and the currency pair and where you place your stop placement. But here's the thing, I've only been able to make this strategy profitable to retest the lows. Okay, so my target is going to be the close of these candles. However, we are in clear trend continuation, and if I go to the 240, in fact, was it the dailies? Let me go to the dailies. Look at the low. The very lows are right here, so the 240s. I do believe we can get down to that level. So this will be two targets I'm playing for. It will be for a retest of that low. You can see we may be getting the breakout now. And then be playing for that extension. So let me just go back to the 5 minute. Do we have the RSI confirmation for a double top or a retest? It's going to be an ugly one. Let's have a look. Okay, just about. I'm going to have to fatten that up a bit actually. No, we don't have the RSI confirmation there. So what I'm going to do is just wait another 15 minutes. Now, just because we don't have the RSI confirmation doesn't mean that we're not going to come back up for the retest. But if we do get this candle like this, where it's clearly broken out the channel, I'm going to need that there, then I will end up selling this market. I'll end up with stops just above there. Then I'm going to be looking for the retest. I'm going to make that green. And we'll make this red. I'm just going to check the reward to risk on this. We'd be looking about 12 for about 19. Okay, one thing I'm considering is this. When we have very small patterns, if this was our entry here, and then we front run if we hit target ones, and I move a couple of pips past break even, then when price hits here, it only needs to come to here to be stopped out. So this, I'm considering just holding this, and when we come down to this level, just moving to break even up here and seeing if we get that follow through. I don't know, I'll have to see what the reward to risk is and how much room we actually have, and see whether or not we do actually start to make our way back up for a retest. That will give me a better reward to risk. So I'll next look at this at 11:30. Okay, we're back here, cocked up here, cocked up in terms of the entry. So there's the lower low, lower close. I instantly sold it, and what happened then is I only sold it with one target, and I used strategies, so I had to cancel the whole position. As soon as I went to sell it again, the market dropped. So what I've done here now, I've set a limit order which will give me 2 targets, and this will be the risk to reward. Hoping then that we can just see a little bit of a pullback, a quarter of a candle of this, a quarter back of this candle, and then maybe get filled. We're back. I managed to get my entry, and we did get that retracement that I was talking about. One thing that I did forget just to run through, and I like to be as thorough as I can be with these, is if I put a structure level on just here, and I did already indicate here, didn't I, the structure level, and we was looking within the wicks of potential double top. Look at this. This is very important. If we zoom in, well, everything's important. You want as much confirmation as possible. Right here, where this line is the closes of the candles, and look here, we did not close above them, so we have held structure, and then we broke out, had a lower low, lower close, another lower low, lower close. Because of this big bullish candle, it would not surprise me now if we double topped. It's not a valid double top because I haven't got the RSI confirmation, but I will call it a retest. And don't like to talk too much about my experiences with this, but typically we see quite a bullish move, and then all of a sudden it just drops. Whether or not that happens this time, I don't know. I'm very happy with this setup. It's only a small trade. It's only a small trade in terms of the risk, and we're looking at 15 pips of risk. Now I've made sure that I've got my stop above this swing high, 3 pips above it, giving me plenty of room. Standard retest is the closes of the candles. I'm actually a few pips below that because, as mentioned, we are in trend continuation, and I do believe we can get to those extended targets for target 2s, which you can see just there. So as we approach this level, I am actually going to reduce down the risk, and obviously if we can get target 1s there, I'll be moving to break even and holding for those secondary targets. To target 1s, we are looking at 19, so just over a 1-to-1 risk to reward there. And target 2s, I'm actually front running it by a pip. We're looking at 57. We're back. The update is I lost. These flags are killing me. Last couple of weeks have been a real don't know, poor. Just been poor. Look what happened though. I'll just go back to the 15, not the 5, and here on the 15. Look at what happened. We once again had the breakout. We came up for the retest that I spoke about, and boom, I have been stopped out. I have a very high win rate on flag patterns, usually a very good reward to risk, and it lost. I've had close to, I think, 5 of these lose now, so really hitting a losing streak with these flags, but it is what it is. -15.